Investing isn't a game of analysis, it's a game of meta-analysis. If a stock is trading at $50, but your analysis shows that its intrinsic value is 100, that's great, but you won't make money unless you're correct about investor behavior. The way to make money in the stock market is to be one step ahead, to understand what the market as a whole has yet to understand, or to figure out what they believe is true actually isn't. And most importantly, to try to ascertain when the market will understand the truth. Hi, I'm Brian. I'm an investment advisor. I manage portfolios for investors like you. Let's talk market forces. Smaller, more efficient open source AI models will have a much larger role to play in the future of AI. The massive frontier LLMs will lose vast amounts of market share to the more flexible AI firms riding on their coattails. When will the markets realize that the AI capex boom is a money furnace and begin shifting their capital to more productive uses? The margin of safety for investors in tech stocks is razor thin. As a whole, the global semiconductor industry is currently trading at a price-to-earnings ratio of about 55. That means if you want to own $1 of current earnings from the semiconductor companies, you need to pay $55 upfront to buy the stock. What does that imply about the future expectations for the industry? Dan Rasmussen of Ferdad Capital, using a process developed by Michael Mabosson and Alfred Rappaport, calculated that about 75% of the current value of the global semiconductor industry is derived from cash flow projections that are more than 10 years in the future. 10 years ago, in 2016, OpenAI and Anthropic didn't even exist. But now they're set to go public in the fall at valuations of near $1 trillion each. That's a combined market value that exceeds that of the entire U.S. energy sector. To justify these valuations, they need to fill the shoes of companies like Google and Microsoft with pricing power that can last for decades. But here's the problem. Their pricing power is already cracking. Open source models from around the world are emerging as real competitors, not just in the low-end retail segment. American AI firms are targeting high-end enterprise users. The moat is evaporating fast. As American companies move from experimenting with AI to implementing larger-scale AI solutions, they're beginning to ask, are OpenAI and Anthropic's models worth their cost? Could we save money by moving to a different AI solution? Let's say you're a company with a $10 million AI budget and you're running on Claude Opus, Anthropic's top model. You could burn through that $10 million in a few weeks. Using DeepSeek, you might be able to make your $10 million last for 12 months. Artificial Analysis, an AI benchmarking company, crunched the numbers. Anthropic's Claude costs 9 times more than the cheapest Chinese alternative to do the same work. In many cases, even models that are 6 or 12 months old can perform many tasks perfectly well. Chinese labs, Moonshot, Xiaomi, DeepSeek, Ziphu have all shipped open source models in the last 4 months that match or nearly match the American frontier models on benchmarks that matter. Jensen Huang, the CEO of NVIDIA, said, quote, "American models are better overall. However, Chinese open source models are well ahead of us." Last month, in an interview with Dwarkesh Patel, Jensen said that the Chinese army of AI researchers is a fundamental advantage and they're the best in the world. This month, according to OpenRouter, 3 of the top 5 models are Chinese. In 2024, they represented 1% of AI usage. Today, they're at more than 40%. Meanwhile, OpenAI and Anthropic and other frontier LLM companies are burning billions on AI infrastructure, training ever larger models on the most expensive chips on a power grid that can't keep up. Those costs will be absorbed. The only question is by who? consumers have a choice. It's the investors who are going to be left holding the bag. The edge that can justify premium pricing is eroding fast. Open source models are closing the gap. For governments, banks, healthcare companies, and others that won't touch Chinese models, American startups are stepping in, and the OpenAI and Anthropic are getting squeezed. Cohere, for example, builds its models specifically for these customers. Their smaller, more efficient models are built specifically for regulated industries. According to their CEO, Aidan Gomez, Cohere's revenue increased by 6 times last year. NVIDIA is now shipping its own open source models, called Nematron, positioning them as an alternative to Chinese models and the overpriced frontier LLMs. NVIDIA understands that AI can be built by anyone, not just a few players. They're big supporters of open source because they want to sell their chips to a diversified customer base. Palantir, Salesforce, ServiceNow, and CrowdStrike are all using NVIDIA open source models. Reflection, another American AI startup, just raised capital at a multi-billion-dollar valuation as an American alternative to DeepSeek. NVIDIA, Cohere, and Reflection are all going after the same market. Companies seeking capable AI models at a fraction of the cost, built on trusted AI infrastructure. This fall, when OpenAI and Anthropic go public, we'll see what investors have to say. For now, they're being priced as if they own enterprise AI. But the evidence says the slice that they do own is getting smaller. At Alpha Rock, we recently took a position that's aimed at profiting from the AI infrastructure overbuild here in the US. We're positioned to take advantage of the coming disruption to the mainstream AI narrative. If you'd like to see how I'm investing for my clients, download my second quarter investment outlook, The End of Easy Money. It's free at alpharockinvestments.com. And before you go, please like and subscribe. It helps me reach new viewers. To learn more about our services, contact me directly. Links are in the description.